Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights and inspiring stories. Today, we're going to explore one of the most powerful forces in finance, compound interest. Compound interest is a fundamental concept that can help you achieve your financial goals. Whether you're an entrepreneur, investor, or simply looking to save for retirement. So, what exactly is compound interest? In straightforward terms, it's the process of earning interest on both the principal amount and any accrued interest over time. This means that your investment or savings can grow exponentially, creating a snowball effect that can help you build wealth faster. But why is compound interest important in the world of business and entrepreneurship? The answer lies in its ability to accelerate growth and create competitive advantages. By harnessing the power of compound interest, businesses can scale more quickly, investors can earn higher returns, and individuals can achieve financial independence. In fact, compound interest has been a key driver of economic growth throughout history, from the early days of banking to the modern era of fintech. One of the most influential thinkers associated with this concept is Albert Einstein, who reportedly said that compound interest is the eighth wonder of the world. The idea is simple. When you earn interest on your investment or savings, that interest is added to the principal amount, creating a new base for future interest calculations. Over time, this process can lead to staggering growth, as illustrated by the famous example of the Rule of 72. This rule states that to calculate the number of years it takes for an investment to double in value, you can simply divide 72 by the annual interest rate. To illustrate compound interest in action, let's consider a few real-world examples. Take the story of Warren Buffett, one of the most successful investors in history. Buffett's net worth has grown exponentially over the years, thanks in part to his mastery of compound interest. By reinvesting dividends and capital gains, he's been able to create a snowball effect that has propelled his wealth to staggering heights. Another example is the company Amazon, which has used compound interest to fuel its rapid growth. By plowing profits back into the business and leveraging debt financing, Amazon has created a virtuous cycle of expansion that has disrupted entire industries. So, how can you apply compound interest in your own ventures or career? The key is to start early and be consistent. Whether you're saving for retirement or investing in the stock market, it's essential to create a long-term plan and stick to it. One strategy is to use dollar-cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of market conditions. This approach can help you smooth out volatility and avoid emotional decision-making. Another tactic is to leverage tax-advantaged accounts, such as 401s or EAAs, which can help your savings grow faster by reducing tax liabilities. However, there are also challenges to consider when applying compound interest in practice. One of the biggest obstacles is inflation, which can erode the purchasing power of your money over time. To mitigate this risk, it's essential to diversify your investments and stay informed about market trends. Another challenge is discipline. It's easy to get caught up in get-rich-quick schemes or try to time the market, but these approaches often lead to disappointment and financial losses. To overcome these challenges, it's helpful to draw on research findings from behavioral economics and finance. For example, studies have shown that people tend to underestimate the power of compound interest, leading to suboptimal investment decisions. Another study found that investors who use a long-term perspective and avoid emotional decision-making tend to perform better over time. By understanding these psychological biases and heuristics, you can create a more effective investment strategy and stay on track with your financial goals. In addition to these insights, there are many tools and resources available to help you apply compound interest in practice. For example, online platforms like Robinhood or Vanguard offer low-cost investing options and educational resources to help you get started. Another useful tool is the compound interest calculator, which can help you visualize the potential growth of your investments over time. In conclusion, compound interest is a powerful force that can help you achieve your financial goals and build wealth over time. By understanding the principles behind this concept and applying them in practice, you can create a brighter financial future for yourself and your business. Remember to start early, be consistent, and stay informed about market trends and research findings. With discipline and patience, you can harness the power of compound interest to achieve financial independence and success. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.